we're a European company, so we think, for many investors, it kind of resonates with that whole theme of building up Europe's defence sector via a European ETF with a European company. And at the same time, with the US becoming kind of a bit more unpredictable, potentially shielding, investors from any sort of regulatory or political decisions emanating from the US.
Hello, you're watching Proactive. Joining me in the studio today is Tom Bailey. He's head of research at HANetf. Tom, very good to have you in the studio with us. You've seen strong interest in your global future of defence fund, that's NATO. Why have you also decided to launch a European-focused defence ETF?
Sure. So if you look at global defence spending, it's rising. So if we look, say, between 2023 and 2024, global defence spending rose by about 7.5%. But if we look at Europe itself, we can see some of the faster growth from Europe. So Europe as a whole, defence spending rose between 2023 and 2024 by 11.7%. And then if we look at individual countries such as Germany, we can see that defence spending there rose by 23%. So Europe is very much one of the faster areas for defence spending growth. And that was the case before, obviously, the events of this year, which has kind of drawn a lot of interest in European defence specifically. So we're already kind of thinking about that European exposure that we could potentially provide for an ETF. And then obviously we've seen this year, for example, J.D. Vance's speech in Munich. We saw the bust up in the White House between Trump and Zelensky, and that's kind of really cascaded into European leaders kind of getting much more serious about defence than they were already. I think since 2022, with the second invasion of Ukraine by Russia, we have seen strong growth of defence spending in Europe for that new reality. But now with this kind of potentially more isolationist US, we've seen even stronger commitment. And interestingly, what we're seeing is a move within Europe towards sourcing its defence equipment more from Europe itself. So estimates vary, depends who you read, but it's around 60% of European defence spending goes to US companies. That's seen as too high, and so we've seen a big push for what Europeans call strategic autonomy, and that is kind of rebuilding their military capacities after years of underspending, but also doing so with European companies and trying to kind of reduce that reliance on the US. So that's kind of been a major boost to the European defence sector and kind of attracted this investor interest. So that's why kind of we thought having a standalone European focused product would kind of sit very well with investors and is very much in demand right now.
But in the literature around the new European defence ETF, and it's called ARMY, I think that's the ticker,
Yeah.
You do make the point that HANetf is a European company. Why is that important?
Yeah, I mean, there's two reasons. One is this idea of strategic autonomy I mentioned. Europe is trying to build up its own, or strengthen rather its existing defence ecosystem, and that's part of strategic autonomy. But also at the same time, when it comes to capital markets and other areas, and trying to kind of build up this European autonomy itself. And so, HANetf, we're a European company, so we think, for many investors, it kind of resonates with that whole theme of building up Europe's defence sector via a European ETF with a European company. And at the same time, with the US becoming kind of a bit more unpredictable, potentially shielding, investors from any sort of regulatory or political decisions emanating from the US is also an area we've seen investors kind of raise some concerns. So we very much do think it's kind of key to highlight that we are a European company launching this European defence ETF.
What have US President Donald Trump's various tariff announcements meant for the investment case for European defence, Tom?
Sure. So, with the announcement from the Rose Garden of these reciprocal tariffs, we saw markets in general fall. And with that, some of the prices of the defence stocks that had performed very well this year, we've seen some rebounds, and it's kind of just a broader sell-off in the market. As we see it, the tariff announcements are kind of indicative of the US kind of becoming more isolationist and also potentially upending both the post-World War II order and the post-Cold War order, kind of two go together in many ways. And kind of this upending of say, the US commitment to global free trade kind of dovetails with what we see as its potential move to more isolationism when it comes to defence and security as well. So I think for European countries, the leaders of Europe, it kind of reaffirms this idea that they're going to have to pursue policies and spend much more on rebuilding their defence capabilities themselves. And with that, the kind of the benefit for European defence stocks.
Okay, and so your European defence ETF, the ticker, as we said, was ARMY, and it's listed trading on 3 exchanges, isn't it?
Yeah, it's currently listed on the London Stock Exchange, Xetra in Germany, and also Euronext Paris, and will be soon listing in Italy.
I hope you'll keep us abreast of any developments with that. Thank you very much for coming through today.
Thank you.
That's HANetf Head of Research, Tom Bailey.